all of the pension plans and the types of people who could benefit from our own dollars flowing into these companies are divesting from them because of ESG reasons. Why not just say, no, you're all making the wrong move. We should all hold these stocks so that we all benefit from the repatriation of our own dollars, for instance, through oil prices, gasoline prices, all the rest of it.
I love it. Universal basic shareholder.
Right.
Fantastic. I wish the White House had done the level of analysis that Kayla did, because she was spot on target. Look, what do we want over the long term, right? We're supposed to be long-term thinkers. We want these companies to invest over the long term, both in fossil fuels, but perhaps new energy sources, perhaps geothermal. And in an industry that's very cyclical, boom, bust, when times are better, you have to let them keep profits, do with profits as they will for when times are bad. And to assume that, I don't know, a White House deputy press secretary knows better how to ensure the long-term performance of an oil company, it's pretty much a stretch.
Well, okay, but we know that, okay, Jimmy, make the case. I know you can play devil's advocate better than anybody. What is the genuine case for saying this buyback is too big and you, Chevron, ought to be investing more to bring down oil prices, gasoline prices for everybody? I mean, can you make that case?
I would find it very difficult to make that case. Companies invest for the long run where they can get a good return. So what you're saying is, like, that shouldn't matter. Whether or not they can get a good return, or it would be better to put that money back to shareholders, which will get recirculated in the economy, to say, like, that's the wrong decision. When, boy, you know what? If you look over the long term, companies that buy back shares are outperformers. That is just, I think, one of many, like, little interesting facts that suggest you have to rely on companies knowing how their own business runs, and they know what to do for the long term, for the health of that company, and for the shareholders, by the way, the owners of the company.
Is there anything, Kayla, that might actually come down the pike here to, we've seen various proposals over the years to tax buybacks, especially if you're looking to raise revenue, things like that. I mean, is this just kind of using the bully pulpit, or could there be something more to it?
Well, it is the bully pulpit, and it's been used for the last several months. These executives have come to the White House and had private conversations with White House officials, and the messaging from the White House publicly has remained consistent. And there is also a 1% tax on buybacks in place. And there was this idea at the end of last year that that tax was going to cause a lot of this activity to be backloaded to the end of last year. That's why you saw a lot of SPACs liquidating, because the repurchasing of some of that activity was categorized as a buyback per se. And there was this idea that maybe there would be a chill on buybacks from that 1% tax that was going into place. But Chevron's a company that has enough money that 1% is a drop in the bucket for this particular transaction. And so unless it gets higher than that, really, really large companies, blue chip companies like this, are not really going to feel the pinch from that, Kelly.